Chapter 5, Problem 2, Conclusion. This has to feel to you like you're reading some long Russian novel. Anyhow, this is not the Brothers Karamazov. This is Leach Incorporated. And now we're doing the financial statements. Remember, order counts. We have to do the income statement first, then the statement of owner's equity, then the balance sheet, and then the cash flows. Ready, aim, fire is not the same as ready, fire, aim. So let's take a look here. We need to come up with the revenue. The only revenues we have are right there. We have $32,000 and $88,000 in revenue. So $32,000 plus $88,000, our total revenue, 32 and 88 is $120,000. I actually could do that one in my head. Then, expense, we only had one expense that we paid cash for, the salary expense of $65,000. And we had the uncollectible expense that had to be $200 more than the $768 we wanted. So we recognized $968, if you remember. Back here, okay. $968. And you can make these negative if you want. It doesn't really matter because you know that when it comes here, revenue minus expense is income. So our total operating expenses here are $65,968. And when you subtract that from $120,000, we come up with $54,032. Now, just to prove something to yourself, if you take the beginning retained earnings and add $54,032 to it, you'll come up with $129,582. That's how we got the ending retained earnings. Beginning retained earnings plus net income, ending retained earnings. So that's the income statement. From that, we're now going to go to the statement of owner's equity. In the statement of owner's equity, put my notes up. We have our beginning stock, which is exactly what it was last year, $10,000. So our beginning common stock is $10,000. We didn't, that actually should be up here, beginning. We didn't add any. So our ending common stock is $10,000. Our beginning retained earnings, $75,550, plus our net income that we figured out just a few seconds ago, $54,032, $54,032. Our ending retained earnings is a combination of these two. $129,582, and our total stockholders' equity, $10,000 in common stock plus our retained earnings, $139,582. And the whole goal of this is to have you see how things flow from year to year, very, very naturally, very normally, and in an uninterrupted fashion. They just flow from one year to the next. So now we're going to do our balance sheet. Again, let me put my notes up. Let me come back to our original. Our cash is $125,000. Our accounts receivable is $15,350 minus the $768. So let's do the assets part. We have cash, $125,000. We have accounts receivable of $15,350, and we have our allowance for doubtful accounts of $768. That's how much we're saying we don't think we're going to collect this of the $15,300 that's owed to us. The whole world owes us $15,350. We don't think we're going to collect $768 of it. And that's very common. Companies do that all the time. So our accounts receivable at net, $14,582. Add $14,582 and $125,000. Our total assets, $139,582. At this point, you should be saying to yourself, this number down here better be $139,582. We had no liabilities. We didn't take any notes or mortgages or anything. Our stockholders' equity, we still have our $10,000. That was the sheet we just did. Okay. And we have our new retained earnings of $129,582. $129,582. That adds together $139,582. There's the balance in the balance sheet. The last thing we have to do, and I know it's always your favorite, that's why we save it for last, is a statement of cash flows. Okay? So let me put my notes up there. And my statement of cash flows. Remember, we have operations, investing, and financing. Investing activities, we buy property, we buy plant, we buy equipment. Financing, we sell stock, we sell bonds, we sign mortgages, things like that. If you take a look at our transactions for the year, we didn't sell any more stock. We didn't have any mortgages. We didn't sign any notes at the bank. So we had no financing activities, nor did we buy any buildings, property, plant, boats, planes, automobiles, none of that. So we had no investing activities. That kind of makes that part easy. 0 and 0. Now we have the cash flows from operating activities. So that's cash in from customers and cash out to whomever. We don't really care about this. Keep in mind, we're looking at cash flows. So services on account is not cash. $32,000 cash, that's operations, because that's what we do. And we collected $81,000 from accounts receivable. Accounts receivable is what we get when we earn but don't collect the money. So our total cash from customers is $32 and $81. It's $113,000 cash inflow from customers. The cash outflow for expenses, the only cash expense we had was salaries. We had an expense for uncollectibles, but that wasn't cash. Cash flows, we only focus on cash. So we had $65,000 for operating expenses. Put that in the wrong spot, sorry. So the net cash flows from operating activities is $113,000 minus $65,000, $48,000. So our change in cash was $48,000. Our beginning cash balance, remember we had to fill that in at the very beginning, was $77,000. So our ending cash balance is $125,000. Let's take a look and see if that's what we said. Yep, cash was $125,000. 77 was the beginning. 48 change. 125 is the end. So that part works. And then last but not least, they want us to compute again the balance of accounts receivable. So take a look, our accounts receivable balance, $15,350. Our allowance for doubtful accounts, $768. And our accounts receivable at net, how much we think we're going to collect, is $14,582. Long problem, not a difficult problem. A lot of accounting babble we had to wade through.